Hello out there. My name is Patrick Birature. I'm a businessman in Uganda, and I'd like today to talk a little bit about the stock market. The stock market is so often talked about, but largely in a different context in Europe, Americas, and Asia. What about the stock market in Africa? What about the stock market in a little country like Uganda? What do we need to know about the stock market? The stock market can be a very powerful tool or platform to raise money for those who are looking to raise money at a reasonable cost. Largely this money comes on board as equity. That means if you don't make money, you don't have to pay them dividend or interest. When you make money, you share with them. Whatever profit you declare, you have to share the dividend with the investors who have invested in your company. And that's the main benefit for listing a company on the stock market. If you're feeling a bit averse about the debt, and you've got a lot of debt, and you'd rather swap the debt for equity, whereby with debt you've got a gun on your head. You've got to pay this much interest and at a particular time. With equity, when you make money, we share. When you don't make money, we hold down until we make profit. And that's the biggest advantage, I think, of going to the stock market. Of course, it has several other benefits, like governance. There's much stronger governance, and there's more transparency when you're dealing with a listed company. So it should be a safer bet for the investor to invest in a company that has been vetted and checked thoroughly before it's allowed to list. So if you look at the companies in Uganda, I think there are 8 companies, Ugandan companies, that are listed on our stock exchange, which is a bit shaming because we should have many more. In Kenya, there are over 70 companies, I think, and the rest of the world, there are over 500 companies listed. So it's an indication of the level of maturity and the depth of the financial understanding of a country. So we are still at a very shallow level in Uganda, but we're making progress. At least in my last 5-7 years, we've listed 4 companies. At least I've been involved in the listing of 4 companies that were successful. The first time a company goes to list, it's called an IPO, initial public offering. And that's probably the best time for you to buy. Whenever you hear there's an IPO, do your homework. That's the best time to buy. Most companies that list at that time move up. There's some benefit at the listing stage. And the next best time is when you're ready to take a long-term position. There will be some movement up and down, but you've got to hold out. Most companies do well in the long term if their economics are sound. And normally companies that go to list have got sound economics and they just want to borrow money at a lower price. If you take a short-term position, you think you're going to go in quickly and get out quickly, then you might not get a good deal. I remember when Safaricom was listing, and I was encouraging Ugandans to buy shares in Safaricom. It listed at 5 shillings, and that was in Kenya, 5 Kenya shillings. It dropped at one time to about 3 shillings. But today it's trading at 29 or 30 shillings. Now that shows you that those who waited for the whole longer period have done extremely well. But those who jumped out when the price started sliding, they lost money. And they thought this was the end of Safaricom. But it was a solid company with solid fundamentals, good management, good structure, good strategy. Now, come closer to home, Uganda. Umeme was listed at about 275 shillings a few years ago. I happened to be the chairman of Umeme and I declare my interest. So there's only so much I can say about the company because I don't want to mislead people. But when we did list, we told people that we have a monopoly almost because we had a concession. We distribute almost 98% of the power in the country. And we have got a concession that ring fences a 20% return to our investor, which we shall share with whoever buys shares in the company. So we went to the market with that promise. And we've run for 14 years as a company. The company has had its ups and downs, but largely has done very well. Our share price peaked at 600 shillings. Recently, it dropped, shuddered and came down to 300 shillings. This is because a letter leaked in the government that seemed to suggest that they would cancel the concession. So everybody got scared and started dumping. But now the government has come out saying, go ahead and start negotiating for another 20 years. So that is encouraging. And I think the bottom line about any business that's listed, look at the fundamentals, look at the profitability. Look at the management. How solid is the management? Are they people you could trust with your money? Do they look like they know what they are doing? That's how you invest in a stock market. So I think Ugandans can make a fortune if they take a position. It's a good place to park your money safely to grow. Very few companies that list suddenly go bankrupt. Unlike investing in a private company by private placement because someone has convinced you that he's going to make money, it's safer. It's a safer bet to invest in a listed company. Probably that is why NSSF, the fund that looks after the pension money in Uganda, has grown so big and largely only invests in listed companies, then there's no question about the valuation and the pricing. Everybody knows it's transparent. So I hope more Ugandans will get to understand how the stock market works. It's actually quite easy, and because there are very few companies that you have to do your homework around, a handful of companies, anybody who's a graduate should have a better understanding of how the markets work. And you only need as little as 1 million shillings to invest in the stock market. Of course, the more you invest, the better it is for you, presuming that the company does well. Good luck.